Good morning, ladies and gentlemen, and welcome to the show on this Thursday, the 24th of March, 2022. Thank you for tuning in. I'm glad to have you guys here. Now, here's what I want to say. Things are not going good for Russia in Ukraine right now, and that's kind of an understatement. This morning I saw in there's an enormous ship that's docked that's on fire. Massive explosions coming from it. It's a ship that the Russians use to bring in heavy equipment and artillery and everything else. It's basically an ammo dump on the water. You know, and I mean, it's a big. It's like, oh, I guess over 300 feet long. The ship. The Ukrainians are blowing their ships up. Not only that, going into the interior of the country, the Ukrainians are fighting back, and the Russians are just basically like, well, they're wet, they're cold, a lot of frostbite. Their machinery, a lot of it's out of gas. It's just a situation that is like logistics are just absolutely eating them to pieces. And at this point, they've lost their. It's a terrible situation for them, for the Russians. I mean, not for the Ukrainians. Anyway, it looks like the tide's actually turning on this war. Not in favor of Russia, you know. But I'm keeping my eye on it. But there's something else I wanted to point out to you guys, and we need to get the charts started to show you guys. So let's start the charts right here. It's this story coming out of Ukraine. There's forest fires near Chernobyl, and it says they're sparking a radiation concern. Now, what's interesting about this is on the surface, you know, I got thinking about this. I said to myself, forest fires, well, they're burning trees and stuff, you know. Forest fires are burning through the forest near Chernobyl. And yeah, that forest is in the exclusion zone. But it seems to me that trees, when they're burning, do not produce radiation. To me, that's my idea on it. I don't think a burning tree really creates radiation. So I'm like sitting here and I'm thinking twice about this story as there's radiation concerns. And it says, now I remember a couple weeks ago they did a story and they said there was a containment building holding quite literally, I think it's like 20,000 of these spent fuel rods. And they're still in the cooling operation. Evidently they take like 20 years to cool. And these spent cooling rods, now this was like a week or two, a couple weeks ago, these spent cooling rods were starting to overheat. And they were worried about it back then. And I'm wondering if there's some sort of a connection here. Because they're saying here at the base of this story, they're saying that they're saying that the fire was probably caused by armed aggression of the Russian Federation. But it also says that radiation levels in the exclusion zone, and this is what gets me, and beyond, including not only Ukraine but other countries, could significantly worsen. Now that's what they're saying. And I'm just sitting here thinking in my mind saying, from burning trees? So let's read that again. Radiation levels in the exclusion zone and beyond, including not only Ukraine but other countries, could significantly worsen. I'm like, from burning trees? Because it just seems to me that burning trees don't produce radiation. Nuclear power plants produce radiation. And I'm like, there's something here. There's a piece of the puzzle I'm not getting, you know? Because they're saying that not only in Ukraine, but in other countries, that radiation levels could significantly worsen. From burning trees? Something's just not quite fitting together for me in my head here about this. But I do know that they have a tremendous amount of radioactive material at the plant. What's going on? I'm just not exactly sure. Anyway, we're going to move on and take a look at the markets today. You know what? We've seen a huge pop in the price of silver today. 66 cents up to 25.78. The gold and silver market is smelling what's going on in the in the debt market. U.S. Treasuries have crossed that Rubicon I told you guys about. I said it at the U.S. 10-year at 2.25. It's crossed that Rubicon, and we're having a problem in the debt market right now in real time. This is the first place to look if you want to see the beginnings of a financial crack-up. How am I going to describe it? A financial Armageddon. This is the first place you want to watch, is in the debt market. And this debt market is starting to rise unreasonably fast. I think it's up today, to tell you the truth. And so gold and silver, when there's problems in the world, I mean, they feed off of that, because they are the only real safe haven asset that's sure. I mean, you know, you can go dabble with cryptocurrency if you want, and you might do excellent considering what's coming, because cryptocurrencies have similarities with gold and silver, but they do have vulnerabilities, and one of the big vulnerabilities is they're only going to work if your computer works. We're moving into a world where you're not guaranteed anything to work. But you know, even in a world like that, gold and silver will still stay in your pocket. This is why they used them for thousands of years back before we had computers. Anyway, we're seeing a pop in the price of silver today. It's up to 66 cents today alone. That's quite a big increase. But I told you guys, like, I remember going back like 2-3 years ago, I told you guys you're going to see $3 days in silver. Up $3 in one day. You're going to see $3, and I'm sticking to that, guys. You're going to see $3 days where the silver price goes up more than $3 in one day. And you're going to see those days linked together, like day after day after day, where it goes up more than $3 each day. I told you guys that a long time ago. I don't know. Can you still get some of this stuff? You're not going to care. Maybe a year or two from now, you're not going to care what you paid on these premiums. Right now, it's just going to matter if you've got some. I mean, we're talking about something here where, how high can the price of silver go? You know, you hear all these estimates on here, like some guys saying $50, some guys saying $100, some guys saying $300, and some guys saying $20,000 an ounce, per ounce. It's all just estimates. It's all just throwing a dart, you know, with blindfold on, to try to figure out where the silver price can go. But what I'm telling you guys is it's unlimited, the upside potential, when you're considering that the US dollars is, and all the other fiat currencies are going to be hyperinflating. You haven't got much time left to get some of this stuff. Gold today, 1860. It's up to $1,962. Let's take a look at crypto today. 1958 billions. That means it's almost a $2 trillion industry. Now, you know, it was almost a $3 trillion industry back before we had this this bear market come in. Bitcoin price was at 68,000. Right now it's sitting at 43,000. I'm going to tell you guys, I think it's pretty much over, the buying opportunity that I talked about. And when I predicted it was going to go down 29,000 for Bitcoin, we didn't make it that low. We made it like 33. I wasn't far off, because when I was predicting 29,000 as a buying opportunity, Bitcoin price was still at $68,000 or 67,000, and I was saying 29,000. Well, it went down to 33 or 34. It went down that low. But now we're back up to 43, and I think this buying opportunity, the door is slamming shut on it. You know, and so it's going to be cryptos, gold, and silver all the way to the moon, because we got a financial system that's finally becoming unhinged. Well, let's take a look now at the Dow Jones Industrial Average. It's up 208 points, 34,567. today. Now, I watch the Dow on here, but there's a lot of other markets. There's the Russell and there's the S&P and all that, I mean, and the NASDAQ and everything, and I primarily watch the Dow on this channel because don't go over all the markets because it would just take too long, but the Dow is your big one. And generally when the Dow moves down, the other ones move down, they all move down together. Let's take a look now at crude oil. It's down $1.31 at $113.62 today. Okay, another thing. They are going to start shipping LNG gas to Europe to bypass. They're going to ship it, I guess, on ships. I think they can do that. I think they can pressurize it in tanks or something. I'm not exactly sure about LNG. But Europe uses an awful lot of natural gas, and they use it heat in the winter and everything else. And Russia's a big provider, and they're looking to squeeze Russia off, financially speaking, so that Russia cannot gear up their factories and produce a whole bunch more war weapons really fast. Their war machine will be significantly damaged. Their war machine eventually, if these sanctions continue to get tighter, it's basically going to have a very profound impact on Russia. At a certain point, it takes time for that to work itself out. And it's like the Russians are fighting the battle not just on the battlefield but also in the financial scene. Let's take a look now at the MOVE index today. It's up 100 to 105, and so it's up a little bit today. They're having problems with this MOVE index. They did something. When that MOVE index went up to 133, there was no reason for it to come back down like it did. They did something, and they're just not telling us what they did. So I'm suspicious about that. Why it came down so significantly from 140. It was up to 140, and it came all the way down to 91.76 rather suddenly. That just reeks of some sort of injection of liquidity into the system that they're not telling us, and it would have been in the trillions. So I think the Fed's doing liquidity injections into the system behind our back and not telling us what they're doing. They're not giving us, like they used to be more transparent. They used to, if they were going to do something like open up a repo facility or something like that, everybody would know. Now I think they're just doing it because there's so much diversion happening with this war. Everybody's paying attention to the war, and the Fed's, meanwhile, the banker on the monopoly board. And it's like all the kids are out there. And Mama comes out of the kitchen, and she's got a whole bunch of soda pops and potato chips and stuff, and all the kids turn around to take a look and see what Mama's doing. Meanwhile, the kid that's doing the bank and the Monopoly game is got his fingers in the bank and pulling out the little $100 bills and putting them where he wants them. And that's what the Fed, I think, is doing. While the war's on, everybody's watching the war. They're over here doing whatever they're doing. I don't trust them. Just basically what it really comes down to is I don't trust the Fed at all. I think that they've been up to shenanigans ever since they first got started. Back around 1914. This is why our dollar used to be worth $1. Now it's worth about a penny. This is all the Fed's shenanigans that they've done over the years behind our back. We don't know what they're doing, and they're actually destroying our economy because they've based the whole economy now on a Ponzi scheme run by the Fed. Anyway, let's take a look now at bonds and rates. This is where the action is today. Seeing these yields still rising, Look, we're up to the 10-year at 2.35. We do have an inversion, another inversion here. The U.S. 7-year is higher than the 10-year at 2.4. And another inversion here between the 20 and the 30-year. The 20 years at 2.66 and the U.S. 30 years at 2.54. So we got two inversions there now. Any inversion in the yield curve is indicative of a major problem. And this whole thing has turned into a major problem because the U.S. 10 years well exceeded the 2.25 I told you about. I said we're going to have a problem if the U.S. 10-year goes over 2.25, and it's at 2.35 right now. Houston, we got a problem, a major problem in the system. It's not getting rectified. It's not going to get rectified. It's going to get worse. The financial system is starting to crack apart. And what should we expect? Well, spin-offs. As the bond market starts to implode on itself, we're going to see spin-offs in the other markets. We're already seeing it in price of gold and silver is starting to take off now. They're really, for these people out there who think we've already had the rally in gold and silver and now we're going to go down because it's in a bubble and all this kind of stuff, they're delusional. This is just beginning, this rally in gold and silver. We're on the ground floor with that. Really, that's the only thing out there in all the markets where you're on the ground floor. Everything else is mostly in a bubble, but gold and silver is pretty much on the ground floor. They're not much over the cost of production when you consider the spot price, and this is why they're in short supply. All the silver, every place you go for silver out there, you're going to find it's in short supply. It's not easy to obtain sufficient quantities of it. If you wanted to go out there tomorrow and buy 10,000 ounces of silver, good luck with that. Yeah, you might be able to go out and buy 2 ounces. No, not have that big a deal. You might not get what you want. You might be able to go out there and buy, say, 5 or 10 ounces or 2 ounces. And you might have to settle for something that's maybe a coin that you didn't really. Maybe you wanted to get something like Canadian Maples or Silver Eagles or something, and you might not have to be able to get them. You might have to settle for something else. But try to buy a large amount. Good luck with that. Anyway, taking a look at the U.S. dollar index today at 98.66. So, basically, I guess what I'm telling you guys is the system's starting to tear apart at the seams. And they only have one answer for this, the Fed. They're not using it yet, really. They're going to have to, when it really gets tight, maybe in a few months from now. And that's just going to make things fall apart faster. And I really do not see us getting through the next, let's say, 24 months without something having to be done to reset the whole thing, of some sort or another, the financial system. I'm not saying they can't do that, but this is big because money runs everything. It's probably the biggest story out there. It's probably actually a bigger story than the war. The fact that the whole world's financial system is teetering on the brink of some sort of a catastrophe that's going to impact each and every person's lives out there. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the next show. Bye-bye.